Research Vitality Life Insurance. Additional product, minimum monthly premiums and conditions apply.
Believe that.
He's a good analyst. I like him. I appreciate the other side. I don't really care. At the end of the day, I'm doing my own analysis, and I actually think that there's value here. And I think it's going to take a long time, but I think they're going to make slow progress. And I'm willing to wait. I've right-sized this enough, so it's not something that's an anchor in my portfolio that hurts me every time he comes out with a note. I mean, I've actually think that Emerson has more upside, and that's a much bigger position for me. United Rentals is a much bigger position for me. L3 Harris is a much bigger position for me. So I have balanced it with other names that I think the fundamentals are better, but I do like a turnaround story. I do think that there is an opportunity here, and it's really very well hated at this point, and I don't think it's going to take much.
Okay. All right. Okay, coming up, we're answering your questions in Ask Halftime. That's straight ahead. To reach us, you still have time. Go to cnbc.com/halftime. You can tweet us as well. First, though, Kelly Evans is going to tell us what's coming up on the exchange in less than 15 minutes. Kel.
Yes, I will, Scott. Thanks. We're going to have more on today's jobs report and what it means for the Fed's next move. It's hotly debated. Plus, Microsoft, GE, and Airbnb have several things in common, but one importantly is that they all use freelancers, and they all turn to the same company to find them. The CEO will join us ahead with the trends he's seeing and what that is telling us about what's happening with the jobs market today. And Disney making a bold move in the streaming wars. That's ahead in Rapid Fire. I will see you then. The Halftime Report is back after this.
How do we make the future of
London? Switch to Vodafone, the UK's best mobile network, and Be Unlimited, because the best phones deserve the best network and our new unlimited data plans. The future is exciting. Ready? Vodafone.
Max download speeds apply to unlimited data. Best network as voted by readers of trusted reviews. Terms at vodafone.co.uk/unlimited.
The relaxing sound of fresh, cold running water. And you can have it in your kitchen. With amazing savings on Samsung fridge freezers at Currys PC World. Like the RB31 with its chilled water dispenser for only $399. Or upgrade to the Samsung RS8000 American-style fridge freezer with water and ice dispenser. A huge 609 litres of storage space. At just $1,049. How relaxing. At Currys PC World. Energy rating A+. T's and C's apply.
You don't just live in one room. So why should you Wi-Fi? With Sky Broadband's Wi-Fi guarantee, you'll get Wi-Fi in every room or money back. Perfect for food shopping in the bedroom, gaming in your PJs in the lounge, or streaming sci-fi movies in the kitchen. Get Sky's super fast broadband and Wi-Fi guarantee. £32 a month for 18 months with $19.95 setup. Click on the banner now.
Sky Fibre areas, Sky Kit required. Refund on boost component of subscription paid during current minimum term up to date of claim. Minimum 3 megabits per second or money back. Prices may change during minimum term. See sky.com/guarantee.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Did you know TuneIn doesn't just live here on your smart speaker? From the audio that moves you to the audio that gets you moving. Soundtrack your every movement with the free TuneIn app. Available on your phone or tablet. Download TuneIn on the App Store today.
Major League Baseball postseason is in full swing, and TuneIn Premium puts you at field level for every. And it's a home run! Single. And gone! Game.
And that gone, a home run!
With TuneIn Premium, catch every pitch of every inning of every Major League postseason game until the final out of the World Series.
0-2 pitch, little half swing, and it hit.
At home or on the road, Major League Baseball's postseason action is on TuneIn Premium.
And that ball is gone.
Upgrade today.
All right, we're back. We're answering your questions now. First up, Shannon from Justo in Manhattan. Buy, sell, hold, FDX. FedEx.
We actually sold this stock back in June. We think the competitive environment for FedEx, whether it's from Amazon potentially moving into distribution itself to, the other competitive forces in the space, we think that this is going to continue to be a decelerating growth story for FedEx, and so we would continue to be a seller here.
Okay, I think we know, Joe, where you stand on KKR, but Casey in Greenwich, Connecticut wants to know anyway.
Yeah,
Give us more deets on that.
I will stay with it, but this is where Senator Elizabeth Warren is being priced in as a viable candidate. It is not just KKR. It is Blackstone. It is Apollo. It's the Carlyle Group. I would say Apollo and Blackstone in addition to KKR. I think it's a point of opportunity where they're currently being priced at. These stocks were at all-time highs at the end of September.
Remind me, you said you sold Blackstone and put it where?
Apollo.
Apollo, okay.
Yeah.
I knew it was private equity. I couldn't remember if it was that or KKR.
Yeah.
Coming back to you from Matt in Florida, Exxon. Where's it go?
I don't know where it goes, but at least while you wait, it's you got a 5% dividend yield, and it's very cheap. If you're defensive on energy, if you don't think energy, the overall price is going higher, this is one to own for the long term. If you think oil prices are going higher, you're going to want more beta, more juice. You're going to want more E&P or services, but we're not really there just yet. So I prefer Chevron, but I think you're fine in Exxon long term.
Okay. We're going to take a quick break, okay? We're going to come back. You're going to tell us that new stock that you teased a while ago. Don't say it yet. Don't say it yet. Steph bought something new. Shannon bought something new and sold something. So we'll tell you all of that after this break.
Can you customize the S&P 500 to meet your...
Want to know what's happening in right now? The latest headlines are just a tap away with Fox News Talk on TuneIn. When news breaks, get up-to-the-minute coverage on developing stories from around the world. Plus, hear all the Fox shows you watch on your TV. Listen to Fox News Talk around the clock on TuneIn.
TuneIn puts you on the sideline for the 2019 college football season free all year long. With college football on TuneIn, hear the home and away call for more than 140 schools live, regular season matchups and rivalry games, conference championships and bowl games, the college football playoff.
The throw, he steps up, he's going deep down the right side. Andrews.
You can listen to it all for free.
The end zone, touchdown.
At home, on campus, or on the road, hear the excitement and pageantry of college football all season long free on TuneIn. Hey, NFL fans, can't watch the game? Can't be there? We've got you covered. With TuneIn Premium, you can hear every NFL game live as it's happening, or catch it later on demand. Anytime, anywhere, all season long.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Live from the TuneIn Studios, I'm Fonseca with your daily sports update. Major League Baseball action continues. Today, we've got the Rays at the Astros. This one's going to be at 2:05 p.m. Eastern.
We've had to kind of create some momentum here the last 15 games of the regular season because of the pressure that the A's and the Indians put on us. So we've been on a nice roll here lately.
Once again, 2:05 p.m. Eastern, Rays at the Astros, Game 1, right here on TuneIn. That's your TuneIn Sports Update.
Make sure to follow TuneIn today so you're always in the know. Twitter, Facebook, Instagram. Just search @TuneIn.
Did you know your favorite radio stations are in your pocket? Yes, the TuneIn app lets you listen to the same radio stations you pick up on your home or car radio anywhere you want. To see all the stations broadcasting in your area, find the local radio section on the home screen. Keep it local with TuneIn.
Online now. Read Stephanie Lensman's article on the stocks that are vulnerable to a 15% drop. Go to tradingnation.cnbc.com now.
Fidelity is redefining value.
Deep left center field. A grand slam!
October baseball is here, and TuneIn Premium is your ticket to the 2019 MLB postseason. Featuring the home and away feeds for every game, TuneIn Premium delivers every call of the ALCS, NLCS, and the 2019 World Series through the voices of the local radio broadcast teams.
Here, left field and deep. He's at the wall.
Now until a new champion is crowned, hear every play of the 2019 MLB postseason live on TuneIn Premium. Upgrade today.
With 0 account fees for brokerage accounts and 0 minimums to open an account. At Fidelity, those zeros really add up.
So, ServiceNow put your workflows in the cloud, huh?
Mm-hmm.
Your employees must love you.
Thank you. You could say that. So how are things with you guys?
Great.
Thank you. Thank you, sir.
Lunch next week?
Terrific. Say hi to the team.
Will do. Call my office.
I will.
Sounds good.
All righty.
ServiceNow works for you.
For years, we weren't getting enough sleep, so we wanted the little sleep we were getting to be the best sleep possible.
Friends were raving about their Boll & Branch sheets, so we looked them up. Not only do they have thousands of 5-star reviews, they are loved by 3 U.S. presidents. Now we know why. They're the softest sheets we've ever felt.
And the fact that they're ethically made from organic cotton helps us sleep easy. Until the kids wake us up.
$50 off your first set of sheets at bollandbranch.com.
Tomorrow is just waiting to be created, to be reinvented and redefined. And it's those who dare to push the world forward, discover and reshape markets, and embrace the possibilities of data that will reimagine our potential and transform society as we know it. With new ideas and new technology, get there with NASDAQ.
Make something important happen. Welcome back. Well, we have some sad news to report today. Judd Bergman, the founder and CEO of InvestNet, was killed in a car accident along with his wife and 2 others yesterday in San Francisco. He helped revolutionize the world of fintech. And Josh Brown, I know you were writing about this when you heard about it and you knew him.
Yeah, well, so Judd is like just an absolute titan in the wealth management industry. There probably aren't any financial advisors who don't use at least one of the products that InvestNet provides across the whole fintech ecosystem. They were there, and Judd very clearly saw in the late 90s that this is where the wealth management industry was headed, a symbiosis between great advice from human advisors and great technology, and really great technology, so good that clients didn't even realize all of the things that were going on behind the scenes. So InvestNet is a great company, and I just, on behalf of all the advisors who watch the show and all of their clients who watch the show, just wish the family and the corporation all the best. And it's just very, very sad news. Yeah. But I just wanted to take a second to recognize Judd.
Okay, I'm glad we did that. All right, let's talk about some of those trades that I mentioned that we were going to do. Shannon, you're making some moves. Why don't you tell our viewers what you've done?
Sure. So we actually sold Altria, and I know that there's a lot of investors who don't invest in tobacco in general, but we like the yield on this stock previously. The overhang of the Juul situation has just become untenable for us. We feel that, this is going to continue to be something that the FDA is going to harp on. We're seeing it at the state level. I live in Massachusetts, and we essentially have a moratorium on e-cigarettes right now. We replaced it with Kroger. On this show, I've talked a lot about how I don't love the consumer staples world, but we think Kroger has an interesting story behind it as far as using customer analytics to really lower their costs and keep their inventory appropriate. And so we've added to that position here.
Okay. Stephanie Link.
Yes. So my final trade.
Big reveal.
The big reveal. But I made it my final trade on Tuesday. So, and then I actually followed up and bought it.
Okay. Well, that's always good.
So I gave you guys the heads up. Great brands and a lot of momentum behind their brands. International growth opportunities, DTC opportunities. They're going to grow revenues, probably upper single digits, earnings mid double digits, and I think they're going to continue to generate cash and return it to shareholders. And I took the money from McDonald's, just took my profits, put it into this one.
Okay. Interesting stuff. Let's do final trades, if we could. Joe Terranova?
We talked about
You're first.
Semis at the beginning of the show. Lamb Research, that's the name that continues to push higher, is working for me. Teradyne going towards $60, an all-time high. That's a semi-equipment name, which I've mentioned in the past. A lot of momentum building to go further higher.
Okay. Steph, do you have a new final trade for us?
Broadcom. I mentioned it earlier. I mean, this thing has lagged big time. Any other semi-cap equipment name trades at 12 times earnings, gives you over a 3% dividend yield, which is going higher. So I like this one.
Does that mean you own it?
I do own it, and I'm happy that this Apple news has it actually going higher, and I think it's going much higher.
Okay. Jen?
Trex, we actually like the housing market, to Stephanie's comment earlier, and so we love the repair market here. No international exposure, and this is actually the stock we bought when we sold FedEx earlier this year.
Oh, okay. Josh Brown.
Just want to comment on Charles Schwab and TD Ameritrade. Both stocks had one of the worst weeks I can remember for the brokerage stocks. I think it's too early. These are phenomenal companies. They will change their business model. These stocks will eventually work. I wouldn't run into them right yet.
Okay. Good stuff. Everybody have a good weekend. All of you as well. Thanks for watching. The exchange begins now.
Thank you, Scott. Hi, everybody. Here's what's ahead of us. The unemployment rate at its lowest level since the first moon landing. The president's chief economic advisor says there's no recession in sight, but Wall Street still wants more rate cuts this year. We'll go inside the great rate debate. Plus, Disney throws down the gauntlet to Netflix in the streaming wars, while Comcast and AT&T are reportedly about to spend hundreds of millions of dollars to promote their own new services. The winners and losers from this coming ad blitz. And Facebook has no fear. Even under intense government scrutiny, the company is launching a copycat of Snap and may have just triggered a worldwide battle over privacy. We'll have all of those details. But we do begin with these markets, and Seema Modi tracking the action for us. Seema.
Hey, Kelly, markets responding positively to that U.S. jobs report. It was good, but not great. The Dow currently up triple digits, up 231 points, really being led by tech and healthcare. Keep in mind, even with today's gains, the Dow is still on pace for its worst week since mid-August. Now, let's take a look at some of the winners in the tech sector, really a combination of some of those chip stocks like Skyworks, Qorvo, and KLA-Tencor, as well as Apple, up about 2.3%, and now just $8 away from its all-time high. There is one underperformer, though, within the tech space, and that is HP Inc., its new CEO, unveiling plans to cut up to 9,000 jobs. That's about 16% of its workforce as the company wraps up a very long 3-year restructuring plan. HP Inc. down 9% right now. Kelly, sending it over to you.
All right, Seema, appreciate it very much, and welcome to the exchange, everyone. I'm Kelly Evans, and let's get right to today's top story. The Goldilocks jobs report. While payrolls came in slightly below estimates, the last 2 months saw upward revisions, and the unemployment rate hit a 50-year low. The report making the rate cut debate a little more complicated. And in just the last hour, we heard from Boston Fed President Eric Rosengren, who dissented from the last rate cut and had this to say.
I still have an open mind. We still have more data between now and when the meeting actually occurs. I'm going to be quite attentive to what's happening with anything that indicates that the consumer is changing their view. So we'll have to see how the consumer is continuing to react. We'll have to see what's happening on the price side as well. So I think there's still a little bit more data before the meeting. I don't think I should prejudge it at this point. We've already had 2 easings. Easings don't have their impact immediately.
So there you have it. All comes back to the consumer, he says. Let's bring in Bryce Doty. He is Senior Portfolio Manager at SIT Fixed Income Advisors. Chris Zaccarelli is Chief Investment Officer at the Independent Advisor Alliance. And Joe Lavorgna is Chief Economist for the Americas at Natixis. Joe, so, the part of what Rosengren is saying is that it takes a long time for us to even see the effect of rate cuts on the economy. How much is really going to change between now and a couple of weeks' time when they have to make their next call? I know we get the inflation data next week, but where do you think this really leaves them?
So when I heard that interview with Steve, I heard he's looking at retail sales and the inflation data. And if it's weak, he'll be on the side of rate cuts, which is interesting because what wasn't really spoken of in today's report is the fact that over the last 3 months, household employment is up 421,000. In the last year, the household sector has shown 3.6 million jobs.
It's amazing.
Listen, Kelly, that's 1.4 million more than the payroll data. So by some metrics, today's number was a gangbuster report.
Right. Well, so no, you're exactly right. There's been, we get the unemployment rate from one survey, the jobs added from another, and they're telling us 2 kind of different tales of the economy right now.
And I've been front and center on the Fed pushing for rate cuts. And I'm going to say something that maybe many won't think I'm going to say. I don't think the Fed should be cutting rates this month. Not after this report. No, I think you would wait. They should wait in December.
Yeah.
To me, monetary policy is still too tight. But if the Fed really wants to be data dependent and wants to gain some credibility, this would be an opportune time to hold the line on rate cuts, come with a soft QE to deal with issues in the repo market, and save the rate cut for December.
Very interesting. Bryce, you agree?
Well, I'm amazed to hear that because it's
it seems like everyone's kind of going, okay, cut. But you do look at these numbers, and you do have to kind of stop and scratch your head. You're like 3.5% unemployment.
Right.
Normally they'd be raising rates, especially with inflation going up. But the cross currents and the confusion is the surveys, how people feel on ISM. They're looking weak, but then you see the actual numbers. The durable goods number was actually up, was very strong last week. And then you see the actual jobs numbers. Those are strong. It's almost like we need some measurement to be able to differentiate between the manufacturing sectors that are being hit by tariffs and the whole rest of the manufacturing area and the rest of the country.
Right. No, fair enough. And that, which is why people were looking to the services report. But Bryce, I like your point. It's something Larry Lindsay said yesterday as well, that he likes to watch the hard data. The sentiment surveys are one thing, but he wants to know what is happening with the actual economy. So you're a fixed income advisor, especially here, which means you're right in the thick of this. What is your best guess as to what happens with, for example, the 10-year from here? I mean, with bond, what are we talking about? We got really out of whack in August. We came all the way back down to 1.5% on the 10-year yesterday. Where do we go from here?
Well, with August, we always seem to see the lows of the summer in August. There's just low activity, and so we were expecting a little bit of an uptick, and then we saw 3 months in a row of rising PCE and core CPI. So it was a little bit of a relief to see the wage number stabilize after spiking last month. So from an inflation perspective, we were getting a little nervous about how the 10-year could possibly stay this low.
Okay.
But the thing that's weighing on it is the liquidity problem. The Fed has still had to come in every single day since the Saudis were bombed to do this special injection of cash into the overnight lending market. And so that's keeping everything down. And I think that's a big reason that they would still cut in October.
Okay.
In fact, I think it's about the only reason.
So Chris,
they need to solve this liquidity problem first.
Sure, Chris, let me bring you in on that then, because we have a couple of guests who are now skeptical of a rate cut this month that was almost fully priced in after the weaker data earlier this week. How do you position in the markets here then? I know it says you like technology, healthcare, and consumer discretionary.
That's true. And really, as you look at what's been happening with even Fed fund futures, looking at how the market's grappling with whether or not the Fed will cut later this week, if you looked on Monday, it was around 40% people believe that we'd have a rate cut at the end of October. As of yesterday, it was up to 85% after those two really bad ISM numbers. And then today, after the jobs report, not as bad as expected. Maybe that's come down a little bit. I want to say right before we went on air, I was looking, we're around 77%. So still, the market is expecting a cut later this month. And I think really what's happening is they're grappling with the trade uncertainty. The data has not been bad so far up until this week. The Fed was cutting rates in advance of when they otherwise normally would, especially with unemployment as low as it is. But I think they're trying to figure out how do they couch for the fact that the rest of the world is slowing down. The trade war is impacting confidence. Up until this week, we hadn't really seen that confidence spill over into actual data, but that's what they're really grappling with. So I think the market's expecting the cut later this month, again, just in advance of the trade war. Trade talks are going to happen next week. We could have some type of a breakthrough, some type of a truce. That would reverse that call, and I think we would not get a rate cut at the end of October, but I think all things being equal, we probably get a rate cut. As far as the areas that we're looking at in technology, healthcare, and within consumer discretionary, we're trying to be selective. We're looking at specific areas. It's against our policy to mention specific names, but we're looking within medical device manufacturers, software and services, and also within consumer services. And we think there's a lot of value there given the risk-reward setup that we have right now.
All right. I have to leave it there. Joe, it is interesting to Bryce's point. Maybe at any other point we would be talking about rate hikes, not cuts.
Yeah, well, I mean, the Fed is trying. The problem you have is the economy is not accelerated as much as they thought, and inflation, by their metrics, has consistently undershot target, and you're late in the business cycle. So you're right, the unemployment rate by itself would suggest rate hikes, but it's against the backdrop where people generally don't feel things are as robust as they could be, and the next shoe to drop would be slowing growth or a recession.
Yep. Guys, thank you all. Appreciate it today. Joe Lavorgna, Chris Zaccarelli, and Bryce Doty. Meanwhile, we're going to hear from Cleveland Fed President Loretta Mester today on Closing Bell. That's a CNBC exclusive at 4 p.m. Eastern Time as we continue to see how Fed members react to the jobs number this morning and so much more with the economy. Over at WeWork, it's gone from being the best of times to possibly the worst of them, from the excitement of an upcoming IPO to now word that major job cuts are coming. Let's get this head-turning reversal of fortune with our Deirdre Bosa. Deirdre?
Kelly, that's right. Now, we've talked about the bankers, the investors, and JP Morgan's case both, but it's the employees who have really felt the brunt of that reversal. There was an all-hands meeting yesterday, and I'm told that the mood was very downbeat. A source familiar says that the marketing department alone could be cutting hundreds of jobs. Now, as of June, WeWork had 12,500 employees. As restructuring efforts continue, though, reports say that total job cuts could number in the thousands. Meantime, the company could be facing a cash crunch as early as the first half of next year, according to Bernstein. Our own Leslie Picker reporting that the We Company is in talks with JP Morgan and Goldman Sachs for a loan to stave off that crunch. Now, other reports say that the company could get an injection from SoftBank. Kelly, whoever it gets money from, it's clear that it needs it, though.
Yeah, and Newman getting turned down from co-op boards was the latest fallout that I had heard. Deirdre, thanks very much. We appreciate it. Deirdre Bosa tracking what's happening.